The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
I hope y'all are having a great day. Let's go ahead and check out where the markets are right now. We got the S&P is currently up 12 points. We have the Russell up 10. Nasdaq's up 20 with the Dow up 86 points on the day. Looking on over at oil, it's currently pretty flat at the moment. Not any major change as far as the from settlement period. But of course, we've had some volatility in between. Looking right now, natural gas, it's down 2.5%. Of course, that's the normal MO there for natural gas. It's usually a very volatile instrument. And then looking over at corn, corn is up 22 points with soybeans up 32. Euro dollar is currently down 85 pips, and Aussie dollar's up 39. Pound dollar currently down 93 with the dollar CAD down 35 pips. Looking on over at the U.S. franc. We got a massive move right there in the dollar franc, up 98 pips, a 1% move right there, and sort of really this is the big mover of the main currency pairs right now. Out of all of them, getting some big movement on dollar franc. Looking over at euro yen, it's currently down 82 pips, and we got pound yen is currently down. Let's see, right now we got pound yen currently down 89 pips on the day. And if we look over at the gold contract, I guess U.S. yen is actually flat on the day. So even though we got some major movement on the euro yen and pound yen, dollar yen are just sort of battling it out right now. And so not much going on right there between those two pairs. But look again, right back over at gold. We got gold currently up 11 points at the moment. And it'll be closing down here in about, we got 20 minutes or so. The gold contract will be closing on down. Silver is currently up a little bit, up 0.152, which is 0.8% up move on the day. And copper is currently down 1.3%. And let's see what we got. Trying to see if I can see this over here. I want to go ahead and look at the news we got coming up. This week is pretty light news week overall. It's actually probably among the lightest news weeks I've seen in a long time, and that led to some pretty a lot of choppiness going on yesterday. But I mean, today, what do we got on the board? This morning we had the manufacturing production on the pound that came a little worse than expected. The trade balance came in right about at expectations. Industrial production, a minor impact report on the pound at 4:30, came in a little below expectations. Across the board, those three added up. They drug the pound on down, and like I said, down 93 pips, and it was heading on down. It was already past a deviation and a half there on the day. Looking on over a little bit further this morning, we had some U.S. reports, some Canadian reports, not big movers. But then we had the NYSER GDP estimate. That's not really an actual versus forecast number that comes out, so it's just their estimate, and it's the value of all the goods and services produced by the economy during the previous 3 months. It's considered a medium impact report, but it's hard to trade because you don't really have an estimate, so you can't look for a divergence from the forecast. And then the U.S. had the JOLTS job openings report. So what is the JOLTS job openings report? Well, it comes up from the Bureau of Labor Statistics, and it's the number of job openings that are reported during the current month. And that number's been coming out for quite a while now. And it came in at 3.83 million job openings, basically reported, not including the farming industry. And it's released sort of late, but it can still have an impact because job openings obviously being a leading indicator of overall employment conditions. And so job openings actually increased. They were at 3.76, now they're at 3.83 million. And I don't know if you want to say if that's better or worse. Just depends on how you want to look at the Fed monetary policy. And then tonight, we're going to have the monetary policy meeting minutes coming on out of Japan. That should cause a decent move. It shouldn't be a big surprise, but I'd definitely be looking to just follow the charts, look for some movement. That's 7:50 tonight. And then let's look over a little bit later at 8:30. We're going to have the Westpac Consumer Sentiment Report on the Aussie dollar. That's not really our big report on the Aussie this week. The Aussie Employment Report is going to be our big report on the Aussie this week. And so that's the one we're going to be focusing on. But you do want to be aware of the consumer sentiment. Again, that's not an actual versus forecast. So therefore, it's not going to have near as big of an impact on everything as you might expect. So let's see here. What else do we got coming up this week? Just to sort of give you a news layout. But the nice thing is we do expect some yen impact. We do expect some Aussie impact this morning. Sorry, this evening. So that way, if you night traders out there, you can hop on, you can trade the yen, you can trade the Aussie. You should expect at least some decent volatility. And that'll help you out when, because a lot of times you go in at night and things are just flat as can be. Okay? But again, flat as can be on that. And then we'll look on over at Wednesday. We got trade balance coming out in China. That's a tentative report. But what I always do to know when are these tentative reports coming out is I look back at the history. Okay? So, the history often will tell you, it's just like trading, right? When do they usually release the report? So on the China trade balance report, it came out at 10:15, 9:50, 10 o'clock, 10:02. Just looking at some of the last reports there. So that basically lets us know somewhere probably between 9:45 and 10:15 is about when we should expect that trade balance report. That'll probably cause a little 20 or 30 pip movement, just like the Chinese report did last night. 20 or 30 pip movement in the FX markets in the evening. So again, even though like a lot of times you'll see tentative being at the top, it'll probably be at the bottom. Okay? So we'll have that, like at the bottom on the report there. Like I said, right around usually 10 o'clock or so in the evening. And then let's go a little bit further. We're going to have some French information, not a big deal. RBA speaking, not a big deal. Crude oil inventories, obviously every single Wednesday at 10:30. And crude oil inventories right there, that's obviously always going to move oil. And it sort of cracks me up sometimes. You got people trading oil, and they're like, what just moved oil? And I'm like, what are you trading futures for on oil if you don't know that there's an oil inventory report every single Wednesday? So you need to know that report comes out every Wednesday at 10:30. Okay, mark it on your calendar. The only time it gets delayed is like if there's a holiday. Sometimes like a Monday holiday, they'll report it on Wednesday. Or holiday in the middle of the week, they may report it like the day later. But rarely does it get delayed. But it'll usually be on Wednesdays at 10:30. Also, there'll be a U.S. 10-year bond auction tomorrow at 1 o'clock. One of the, I guess you could say, bigger announcements, but not one that's so much tradable because it's not an actual versus forecast. FOMC meeting minutes will definitely cause some volatility. That's coming out tomorrow at 2. Obviously, with all the, buzz around QE, and is it going to be scaled back in September for sure? What's going on with these better economic reports that have come out? Are they going to go ahead and scale it back sooner? Is Bernanke looking to get all this scaled back before he walks out the door? This coming January, February, is that his plan? What's he trying to do? What's the total plan? And so that's going to come out at 2. And then at 4:10, Bernanke is going to do a speech. Now, his speech is not a congressional C-SPAN type speech. He's doing a speech titled "A Century of U.S. Central Banking Goals, Frameworks, and Accountability." So he's going to be speaking at the National Bureau of Economic Research, the National Bureau of Economic Research Conference. And he'll be talking about the first 100 years of the Federal Reserve, the policy record and lessons learned, and prospects for the future. And that actually brings up a really interesting point. The first 100 years of the Federal Reserve. And if you go back in history, we didn't have a Federal Reserve. We also didn't have income taxes. If you remember, we had a little independence party. We got rid of those. The country didn't need income taxes for, basically its, first century. It didn't need them at all. Our import and export taxes and stuff were more than enough to protect our liberties. But, we needed to, wars were coming up, things were going to happen. Let's go ahead and pass this. And we do bonds, and bonds are patriotic because you put your country in debt and you give it money to, build bombs. But only the rich will be taxed, a 1%. And then that number went up, and it spread across the board. But we didn't have the Federal Reserve before. We didn't need it. And, are there benefits? I guess you could make definitely tons of arguments for benefits. You could also easily make arguments for not having it. But sort of funny. The first 100 years, it's like meaning the previous 100 years, it wasn't there. How did we survive as a country? Anyways, that's off topic. Employment change. Let's see, right here. Looking over at the employment change on the Aussie. That's the big number we're going to focus on. And that's the one you're going to want to be looking at. The employment change number is going to come in right here. The expectation is 0.3. And what I'm going to be looking for on that report is hopefully a number of 5.6 or 5.5%. Okay? So basically, we're looking over at the Aussie employment change forecast. Coming at 0.3. The previous is 1.1 thousand. Sorry, the Aussie unemployment rate, the forecast was 5.6, with the previous being 5.5. But what I'm looking for on the employment change is basically a number coming at 25,000 or negative 24.7 thousand. So 25,000 off the forecast. If we get that, we should get a massive move. Okay? 1, 2, 3 deviation move. However, the cool thing about this report, will be one of the few statistically based reports you can trade this week, is 75% of the time over the last 2 years, it's actually moved over 50 pips. So within 2 hours of that announcement. So that's definitely one you can hop in. You can trade. I like to do straddles on these if I can get them in for less than 50 pips, and a lot of times you can. Or really less than about, try to get for 20 pips or so, try to, net out the profit there. So if you can get in and, grab 50 pips out of that, and it only moves about 20 pips for about 90 minutes before it, so you can look at different potential, iron condor butterfly strategies, iron condors on the spreads or iron butterflies on the binaries over at Nadex. There's a lot of ways to trade it, and we'll pull up a couple of those different ways here. After the break, I'll show you some different examples over there on the TFNN Tiger TV page. We'll get that up and running for you and look through it. So that's going to be our Aussie employment rate number that we're going to be, focused on. And then looking over here, what do we got? We got Thursday. Thursday we're going to have basically Japan is going to have a press conference. Again, tentative. What does tentative mean? Well, we just look at when does it usually have its press conferences, and that's the best way to find out sort of, when we expect these press conferences to be. So right here, it looks like the press conferences usually come around 3:30 in the morning for when they're, this scheduled press conference. And then looking on over here, 3:24. Yeah, so right around 3:30 is about the time we should expect that press conference to come out Thursday morning from Japan, based on just their historical time that they do that specific press conference report. And then Thursday, we're going to have unemployment claims on the United States here, right here, so we'll be able to use that and look at trading. Potentially gold can be a good one, simply because all the stuff with the Federal Reserve and QE that's tied in together. And to wrap it up on Friday, we're going to have a PPI coming out and University of Michigan Consumer Sentiment Report coming out. Both of those being somewhat tradable, but not massively tradable figures, so we don't really straddle those. We just use them to look for some volatility. All right, stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostics Trading Hour. And I look forward to helping you out and getting you going. All right, so let's check things out. Let's see where they're at right now, and let's look at some of the different markets, some of the ways that you might be able to play this upcoming Aussie report. And so some of the ways that you can play it is, like I said, you can straddle it, you can strangle it. But if you're going to do any of these ideas that I'm talking about right now, first thing you want to do is hop on over and go to TFNN.com. Click on the Nadex banner on the right side of the page. Once you've done that, get a demo account, okay? Go to Our Products on the Nadex website, click on Demo Account on their site, and then fill in this username, first name, last name, phone number, and email address. Click Apply for Demo. In about 15 seconds, you'll have a demo account to the exchange, no fees, no cost, nothing like that. You can get right in there. They'll give you $25,000 of funny money that you can play with. Now, to fund an account, what are the restrictions? Well, it's a $100 funding requirement, not a $25,000 funding requirement. You can day trade with only $100 in there. Of course, most people put more, $500,000, whatever, $5,000, $10,000, $100,000, whatever, works for you. But you can hop right in there, open that demo account up with no issue whatsoever. It's quick, it's easy. And check your email as soon as you get it so you have your password. But to create an account, it's $100. And you're able to hop in and trade and do directional trading, volatile market trading, neutral style trading, premium collection trading, range-bound trading, random walk trading. I mean, all sorts of styles of trades that you can do on Nadex. And it's really cool. I mean, if you like futures, then now you get massive leverage without the leverage cutting against you because your risk is 100% defined. And you don't have to worry about being stopped out on the trades. If you don't want to get out, you don't have to get out, and your risk will not increase past the max risk when you get in the trade. And meaning it can go as far as it wants to against you. Your risk will not exponentially grow. And then one of the other things you can do is you can hop in there And you can learn how to trade markets that maybe you just didn't know how. Like you were thinking about forex, but you didn't know how forex worked, or futures, didn't know how it worked. Well, now you can do it in a defined risk setting and on a regulated exchange. And so not OTC, FX spot markets, not having to flip massive contracts on the exchanges, not worried about trading on some bucket shop, international brokerage house, sending your money to Cyprus or wherever, where the government decides to seize, a certain percent of all accounts and everything else. But you can trade directly with the exchange as a member of the exchange without commissions. The only thing you pay is exchange fees. What are the fees? They're actually awesome. It's only 90 cents a contract. It caps at $9 an order. So if you want to put in 100 contracts, $9. But in one contract, it's 90 cents. 4 contracts, it's $3.60. 10 contracts, it's $9. 100 contracts, $9. 1,000 contracts, $9. So per order that you submit, same contract, same price there, that it will be a flat $9 fee for you. Okay? Let's see. So once you got that set up, then, and you've logged in, then you'll also want to make sure you get access to our box spread analyzer over here. And so I'll log you right into that, show you what that looks like, and we'll get you on 2 areas. One is showing you right here. This is the demo account. So as soon as you log into the demo account, then you can start placing trades right away. And if you'll fund your account, you can actually get it extended for a year. So the demo account extended for you. And then if you log into the scanner, you can hop in here and you can place trades. And it's pretty awesome. Let's just say you're a euro-dollar trader, okay? I can go in here and say I want to, buy or sell the euro-dollar or whatever. And with that, I'm able to go in and place trades for, $20, $50, max risk, okay? Max risk and margin, okay? I'm not putting up $230 or whatever it is in margin, right? $260 in margin that I have to put up to trade a mini lot in euro-dollar right now. So just a lot of benefits right there. And we've tied in the ability to do binaries and the spreads inside the scanner. And so you can go in here and you can go, you know what, I want to trade gold, and I want to do, a contract on gold right now and see what might, be available for me. And this allows me to look at multiple orders that exist in the market that I might be able to trade. And where I might want to trade silver, it's closing right now. Gold just closed down. Or maybe I want to trade Forex. And so I can go over here and I can check out Forex pairs. And they got, 8 Forex pairs you can trade, the 8 main Forex pairs. So Aussie dollar, euro dollar, pound dollar, US yen, pound yen, euro yen, US franc, and USD CAD. And these are some of my favorite things to trade just for simple neutral strategies. And one of the things we were talking about earlier was trading the Aussie dollar. So how could you trade the Aussie dollar on the news that's coming up on July 10th? Well, we'll talk about that when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, Now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So we got this Aussie dollar news report coming up. And let's check it out. So it's going to happen tomorrow. And this is just to give you some basic ideas on how you could trade this. But the employment change and unemployment rate numbers come out at the same time. It's going to come out at 9:30. So we got 7 o'clock binaries. We got 11 o'clock expiration binaries. So we don't really have a great binary for doing a butterfly on. You could look at doing a 9 o'clock, what's called an iron condor style spread. And that's where you actually go the opposite direction on a spread. I've done a few of these. I did on the Aussie dollar interest rate. Worked out really well. And it's where you go the opposite direction. Up to, whatever point. So I basically, I have a certain expectation of movement, a range of movement previous to the report. So previous to the report on the Aussie dollar, I expect it to move at really most high to low for 90 minutes before, maybe 20 pips. Okay? So 20 pips high to low. So I can go in here and I can see if I can find some opposite break-even distance reports. And that might have some profit right now. I mean, we're not going to probably see much of anything on here. But, what I'd be looking for is, see how you still like a negative break-even distance? Meaning, if the market went down, I would lose on my buy. I'm sorry, I'd be break-even, which means I'm already I'm in profit. So versus having to move up for me to be profitable, the market would have to actually move down for me to lose. And that's premium question. That means time is in my favor. Okay? And that's what you'll be looking for. You'll be looking for the opposite of the normal on the break-even distances there, meaning can I buy below the market? Can I sell above the market? If I can do that on both sides, something like this, just to give you an example. Right here, let me go up and put the buys and the sells on. And then we'll go down here. And let's find one on the opposing side. So that's a 91.60, 91.10, 91. Yeah, so we can do that one. But I want really a positive number. Let me find a positive number. There we go. Okay, so like that right there. So if it stays in this range, I can make a small profit. And so ideally I want it to stay like in that 20 pip range. So right here in the center. If it goes outside of that, I can start losing how much? Well, a tick. Okay? So 1 tick for every tick goes outside the range, less the premium I receive. So let's say I'm able to get, say, $10 on one side and $10 on the other side. I make $20. It would have to go $20 above where I sold or $20 below where I bought the other spread in order for me to lose on the trade. So I can have quite a bit of room. And if I only expect my range to be, say, 20 pips, high to low, then really if I got 5 and 5, then that'd give me 10 pips of profit ability inside on both directions. So you only need about 10 to 20 pips of max profit between the two sides in order to be profitable on the trade to stay within a 20 pip range. So it's just a range bound strategy. Now what can you do on the news? All right, because the news we expect there to be about a 50 pip movement. And so what I'm going to do is I'm going to go in here and I'm going to say, well, when I'm ready for the news, I'm ready to actually hop in, say at 9 o'clock, I flip around, and I'm going to go for probably the 11 o'clock expiration. Okay, maybe 10, but ideally 11 because I give myself more time because Aussie can sometimes take its sweet little time. And I'm going to say like $100 maximum risk. And what that'll do is it'll show me all of the spreads I could use for doing what's called a straddle. And ideally I get that straddle as close as I can, as cheap as I can. I really want cheap because I plan on taking max loss on one of the two sides. So if I go in here and let's say like I chose, this right here, and then we'll go down a little bit lower and I choose this one. Okay? So between these two, I've done a straddle. I'm risking about $21 total on the trade. So if it went up 50 pips, and let's say I lost $15 on the sell side, and I made $42 on the buy side, then I would net out a profit, obviously. So let's do that math. Let's put the pieces together, because once you just start seeing the really basic, it's really simple math, but you just have to see it a few times to have it. Okay, so you got, let's say, $8 risk on the buy side. All right, so we'll put that over here for buy side. And then we go over here, and we'll put this one up, and we're going to have, say, $15 risk on the sell side, okay? So right there, put minus 15. And over here, we'll put minus 8. And so what's that do? That's going to make our total risk is going to be 8 plus 15, or 23 pips. So now I can go over here and I can go, okay, well, makes my total risk between the two minus 23. So for 1-to-1, I need to net $23, right? If I'm risking $23 to have a 1-to-1 trade, I need to make $23. So how do I make $23? Well, I need to make 23 pips, plus I need to make what the other side's going to lose. So plus 15. That puts me at 38 pips, okay? So I need to make 38 pips. I need to buy it 38. When I buy this spread, okay, when I buy this upper spread right here, I need to sell it 38 pips higher. Okay, well, I'm probably going to buy it maybe, like in this case, this one's like 15 pips already in. So that's going to put me right about 50 pips above where I expect the market to be to take my 1-to-1 profit, okay? And so right there, 38 pips is what I need to make total, so I'll add that to whatever price I bought at. So right now, if I got in there, and I bought at 91.87, I'd want to basically add, okay? So 0.9187 plus 0.38. I'd want to put in an order to sell at 92.25. So as soon as I got filled on my buy, put in a sell to sell at 92.25. And then I'll go in here and I go, okay, what about my take profit order to make 1-to-1 on the sell side? Because I don't know if the thing's going to go up or if the thing is going to go down. Right? So if I'm looking at this, then I go, okay, well, what do I need to make? I need to make 15 plus 8. And then I need to make the risk on the other side. Because I say if it goes down, I expect the long side to take a total loss. So plus $8. And so on that trade, I need to make 31 pips. Okay? So 31 pips below wherever I sell it. And so right now, if I sell that trade, I'd be selling at 91.68. So I go 0.9168 minus 0.31. And I get 0.9168 minus 0.0031. There we go. 91.37. So I sell it at 91.67, 68, whatever price it's at the moment that I go in and hit the button. And I put a take profit order to go in and buy it back at 91.37. Okay? So by putting those pieces together, I'm able to actually have a plan of going, okay, my risk on this trade is about $22, $23, whatever. And I want to make that same amount of risk back. And so what I need to do is go in and find a spread that's going to be, ideally within about a 25 pip or risk or less. And then put a take profit to not only make my total risk, but the loss on the other side. So if my risk is $25, make $25 plus whatever the other side's risk is. Then after I lose, say $15 on one side, but I make 25 plus 15, 40 on the other, I'll net, $25, and I'll profit on the trade. And you have to play with it a little bit, but that's where the scanner helps out a whole lot because it shows you what the max risk is. Add two max risks together, that's your total risk. And as soon as you get filled on one side or the other, and you will be all set. So that's pretty much, that's it. That's how it works. And you may have to watch this a couple times to get it, but that's how you do basically a straddle on Nadex with these spreads. Now you can also go in and you can use our binary scanner. And on the binary scanner, what you can do is you can do what's called a strangle on the binaries. Okay? And I'll show you what that is. Let me close these down and get them out of the way. Right there. And strangle, you'll go to the binaries. Here at the top. And then you're going to, choose like Aussie dollar. And you probably want to narrow down your time. So let's say, whatever time it is, it's, you're probably going to have to choose the 11 o'clock expiration binaries on a 9:30 report. Okay? So if you're getting in at 9, you probably need to be at 2 hours. And then I would go in, if I'm doing a strangle, I'm probably going to put like 5, to maybe 25 for my risk to see what's available. So risk 5 to 25, 2 hours, both directions. And then I can use the simulator, which is pretty cool. So let's say I simulate a range. I think the market's going to go up or down 50 pips. I can just go in here and hit simulate a range, type in 0.0050. Okay? And hit OK. Now that I've done that, I got to give it a second to do all the math. So give it a couple minutes because I have to go through and literally calculate everything on every one of these binaries. So there's a lot of math going on in the background. And once it's calculated everything, then you'll actually be able to see, what the price is, what the binary will be worth, where it's going to go, how much money it's going to make, if it's able to move, say 50 pips above or below where the market's currently trading at. So right now we have the market like at 91.82. So if it went up to 92.25, what would you make in the next so many seconds if it got there? And that's the summary of how the simulator works. There it goes. Okay, so like I said, it takes a minute or two for it to get everything updated and calculate all the math. Now it's calculated all the math for you. And you'll know, because if it says like loss when it's moved up, it's not calculated yet. But so right here, if I bought this one for $6 and sold this one for $94, it expires in the next 15 minutes, I'd make $96 if I got out at 92.25. On this one, I'd make $93.50 if I got out at 91.25. But obviously that's in the next like 15 minutes. What about if I have like an hour and a half, which is going to be a little bit more close to the scenario? Then I go in here and go, okay, well, which one do I get the best payout on if it moves that far, that fast? And you can actually use this risk-reward ratio to see which ones actually give you the greatest payout. And you may decide, well, I can get the 6, but that's not too much better than the 8. So I may go with the 8 because it's closer. Or I may go with 11. That's only $3 more. And it's going to be at $86.50 if this thing goes up to $92.25. So, I mean, it's pretty cool. You can go in and you can actually really take profit orders based on very, very fast market movement. And, give yourself a little bit of an edge there in the market by knowing what the binary will be worth. Now, this is just a fast price move. So this is like you put it in like minutes before the announcement comes out. Now, if you want to put it in and have like plenty of time, then there's one simple rule in binaries. This is the one edge, the one biggest edge you'll get when you trade binaries on Nadex, is you know that when the Aussie dollar, or when whatever underlying market hits the strike price of that binary, like if it hits 92.08, I know that it will be worth $50. Okay? So again, if it hits the strike price, if it just gets to 92.08, I said if it got to 92.25, okay? If it just got to 92.08, if I change that, then it'll update here, in a second. See how it says like $47? Tells me exactly what it'll be worth when it gets there. So I can put in my take profit right at 46 based on 92.08. Now my target was 92.25, but I know if it gets to at least to my strike, I can get out at 46. Why is that important to me? Well, I could put in the order at $86 expecting it to move up 50 pips. That's one possibility that you can do. But I also could buy the thing for 8 and know that if it just gets to 92.08, I can get out at 46.50. If I risk $8 on one side, let's say $9 on the other side, then I risked $18. And let's say I lost $9 on one side, so I got to make another 9. So now I got to make $25. Well, that's a $38 profit. That's greater than a 1-to-1 on this trade. So 92.08 would be a great contract for me to hop in on. I can exceed my 1-to-1 on the trade and do the exact same thing on binaries as I can on spreads. So binaries often can be cheaper and less risk and can sometimes be closer of a profit target than you'd have to have on spreads. The disadvantage to binaries is either you win because you hit your take profit, or you probably lose. So if it just is a flat thing and it barely moves, you're probably going to lose everything. And $18 doesn't sound like a lot, but it adds up if you're doing 10, 20, 100 contracts, okay? Because then 8 becomes, or $18 becomes 180, becomes 1,800. So, it does add up as your size increases. So with the spreads, a lot of times, let's say it just barely moves up, I can get out at break even. I can possibly make back, if I make just enough to cover the other side, but don't really net a profit out, I get out at break even. That's not a bad scenario when you're trading if you can exit at break even. So that's one of the reasons I prefer the spreads, but the binaries work great as well. And the binaries, like I said, sometimes are cheaper. Sometimes I can't find a good spread, and that's when I'll look for the binaries. And you can go in and you can put different simulation risk in there, and you can see, sort of what would this be worth if it hit this price. And it's going to be worth, 47 or whatever, but you can find those ideal strikes within that range really quick by using the simulator. So one of many ways to trade on Nadex, and the scanner is just here to help you do it fast. Because if you're not using the scanner, you know what you're doing? You're diving in here, and you're literally trying to do the calculations on all of these binaries, hundreds of binaries, sometimes 100 plus binaries on just one market. This brings it down to 2 or 3 that we're actually interested in on a specific market. All right, stay there. We'll be right back for you after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so just going through some different ways to do trades on the Nadex platform using the Apex, method for diagnostic trading here on TFNN. And you can go in and you can go in and trade, basically a diagnostic trading method. Very simple, and that's just getting one step ahead of the markets. It's seeing things that other people don't see. And so if you're in here and you can see different trades that other people are even aware of, premium collection trades they don't even know about because they're not on the right tab, they're not looking at it, they're not doing the calculations fast enough, then you give yourself a massive edge over other traders who are just trying to, guess over here on the platform and they're not able to do all the math fast enough. So this puts you one step ahead of the markets by helping you have the math versus having to do the math. And I mean, think about it, right here, you go and you go, okay, well, that's a $15 profit, that's an $85 risk, that's a 90, that's an 88, it's a 93, it's an 88, Over here, boom, done. And doing all of the math for you. So you can go in, and if you're looking at doing the trade, you can simply just pull it up and put the information in and put all the pieces together. And what else do we have? Let's go ahead and check out a few of our deviation levels. And I wanted to go in and look at just where the major indices are sitting at right now for you and put some of those pieces together, okay? So right over here, we got the S&P, and we see it's sitting right now up at the 0.7 deviation level. It's trying to move higher. But we're seeing a lot of downtick volume. I don't know how much higher it's going to be able to move on the day. We're approaching that 1 deviation line, so that really is our next target. It's giving us no reason to think that it might not hit that. But right now, with the next target would be 1651. If I flip on over and look at the Russell, then we can go in. We can see, we're at the 0.7. We're looking at moving up towards the 1 deviation marker right there on it as well. And we can go in and we can check out the Dow. Dow is sitting right now at the 0.7 deviation level. So they're all sitting there, all trying to decide, can they push it all the way? Can they make it to a 1 deviation mark? That is usually where the markets try to head, is that 1 deviation mark. And one last market we got to look at on here, we got the NASDAQ. So here on the NASDAQ, it's doing the exact same thing. So all markets are really in sync at the moment. All of them trying to see if they can hit and push right on top and just basically just push through any further. They haven't been able to do it yet, but day is not over. They got a little room, little strength left in them. There's nothing really stopping them from moving on up at the moment that I can see. So I'll keep an eye on the broad market index, but we've basically been in a nice uptrend, pretty much most of the morning after the initial drop that we had, and the market went on down, and it dropped till about 11 o'clock, which is normally the reversal point in the market. A lot of the trades I do are based on the 11 a.m. time frame, just in the trend, and of course that's when the bonds come out over on the New York Federal Reserve. And if you've never seen that, you can go over to just Google, and I'll show you this real quick. It's a helpful little tool. But you can go in and do just Google New York Fed, okay, so NewYorkFed.org, and then you can see markets, and you can see open market operations. Under that, you can see permanent, and you can look at the operations for the day. So what have they done today? And notice, when do they do it? They release at 10:15. They close down. The outright coupon purchase they're doing at 11 a.m. Think that might affect the market somewhat? Yeah, they do this pretty much every day. And if you want to know when they're doing it, you can look at the operations schedule. And it'll actually lay out the entire schedule for the month of bond purchases and on what days they're going to buy more, what days they're going to buy less, and what days they're not going to buy them at all. That might also have an effect on the market. And then you can also get the temporary to see if there's any temporary updates, and you can get notices on Twitter and email alerts when they make these operation purchases. So, anyways, that's something for you to look at. You'll have a great day.